both the S&P 500 and the NASDAQ both in positive territory for the month of August, despite that sell-off that we saw earlier last week. Stocks buoyed by recent econ data. So are markets recovering, or is this just a dead cat bounce, which is a short-term recovery in a declining market? Our very own Jared Blikre has done the technical analysis and is here for more. Jared.
All right, let's take a look at what a dead cat bounce is. No animals hurt in this process here. It is a temporary small recovery in the price of a declining asset, often seen in a bear market that is followed by a continued downward trend. It can mislead investors into thinking a market has bottomed. So if you're paying attention to the definition, it sounds like you only know if it's a dead cat bounce with hindsight because it essentially fails. So let's take a look at the current price action here and see where we are in the S&P 500. I'm going to show you a 2-month chart with candlesticks, and I do like candlesticks because they allow me to see inflection points very easily. You can see the open, the high, the high, the low, and the close in each of these bars. This goes back 2 months. So this right here is the all-time high, just short of 5,700. This right here is the most recent low by about 5,100, and all in all, I don't even think this was a 10% decline. So this is pretty mild by historical standards. But we got a very, very steep sell-off on some very scary things happened internationally with the Bank of Japan and the carry trade. And we got this big down series right here at the change of the month. Bam, bam, and then we were down to these lows, and it was looking pretty scary down there. A lot of people say buy the dip. Well, it's not always easy once you get the dip because, well, the VIX hit 65 at that level. But what's happened since then, it has clawed its way back. And the first hurdle was getting past this prior support point, which was able to do on this day right here. And then 2 days later, it was right back up to this resistance level where it is right now. That is still resistance. If it punches above, you can see it's probably an easy bet that it gets back to those record highs and at least ties it. But the key moments here are really the clearing of some of these levels in here. And that determines, in my point of view, whether or not it is a dead cat bounce or not in the making. And that's what we want to figure out in the making. Another point on this capitulation low right here, I'm calling it a capitulation low because in the market internals inside the S&P 500, you had a record amount of volume on down stocks that day. So while it wasn't a disaster, this was only a few percentage points moved down. We've seen the Dow down 1,500 points. We've seen 5% down days. That was not it. But when you look inside the market, that was probably a capitulation event that chased out all the remaining bears. And then with no more firepower at the lows, it had no choice to go but up. Guys?